Hello, everybody, and welcome to our latest market update video for Southern California. This is the Domicile Real Estate Southern California Housing Market Update. My name is Stephen Mead. I'm the broker here at Domicile Real Estate, where we are on a mission to not only help California's renters become home buyers, but we're also the real estate firm for people who love houses. Anyhow, without further ado, I'm going to get into our stats because we actually have a lot to talk about this week. First off, something that I want to say is if you feel like the market is absolutely nuts and crazy, you are not incorrect about that. I don't think in my career, which now spans since a real estate licensee almost 20 years, I've never seen a market like this before. It is both more active than the market of 2006 and 2007. And the buyers, unlike then, are all real buyers. These are not speculators. These are people looking to buy homes and largely live in them, which is a very different market. And I think that's actually fueling the strength of this market as well. Anyhow, without further ado, let me go ahead and get our stats going. Let me open that up here. Give me a second here. Oh, we are in the middle. Let me start off from the beginning. All right, so starting off from the beginning, this is something that we have been tracking the whole time. And this is probably, really, if you're a buyer out in the marketplace or if you're a seller, this is something that you need to understand, right? If you look here, our total number of active listings under $1 million, this has steadily fallen. We got a jump up in the beginning of the year, and then it has just been on this gentle downward slope pretty much the whole time. We got a little bit of a reprieve here, but that was short-lived. The last 2 weeks, it has continued to drop. Same thing in our $1 to $2 million categories. Now, the reason why this is important is because of something else I'm going to show you in a second. Right? There is a scenario where more and more sellers could be putting their homes on the market, but total active listings continues to go down because the buyers are operating at a faster pace than the sellers. And that is exactly what is happening here. So if we look here, this is our new listings in the last 14 days, right? And this graph really sort of lays it down for you. Towards the end of the year, new listings took a dive around New Year's. That's to be expected. Nobody puts their home on the market around New Year's. And then they jumped up here. And then we've actually seen, right? And I said in the description that it's not all bad news for buyers. And really, this is the thing that if you're a buyer, this gives you a little bit of hope, right? If we're looking here, what do we see here is that actually these numbers are pretty steady. Like more and more sellers are deciding to put their homes on the market. This is a good thing if you are a buyer. It means you'll have more selection, and it hopefully at least helps the market head a little bit closer to being in balance. Right now, we are nowhere near balance. I will just tell you that. There are tons of buyers and there are not nearly enough sellers. What's interesting is we see the same in our $1 to $2 million category. It's just a much gentler slope, right? The drop was less, the bounce was less, the gradual increase is also less. But what's happening is this is the problem. So if this is our graph of new listings, this is our graph of new escrows. And we had a little bit of a break, right? Last week, we saw a little bit of easing, but here we go. We are right back up again. And when I see this, what this starts to tell me is that we are getting back into that yo-yo effect. We take 14-day stats now, so that hopefully gets a little bit of it out. But we are in what's called an inventory constrained market. That means that there simply are not enough properties on the market for buyers to buy. And as soon as there's a new load of properties, people run out there and they jump in and they get those properties into escrow. And if we look at our absorption rate, that really sort of tells us what's going on. So under $1 million, I mean, this number keeps going up. We are heading back towards 100%. We are in the 90s. This is nuts. And in the 90s basically means every home that comes up in the market ends up getting spoken for. And that our overall inventory levels are not really going up. We're never building any inventory because for every new home that comes in the market, there is a buyer ready and willing to buy that home. Things are a little bit better in our $1 to $2 million market. If you look down here, slightly better. But the reality is these are very competitive markets. no matter what price range you're at. But I want to show that distinction, and there's another chart where I think it makes a difference. You'll notice that here. Let me go off screen share for a second. You'll notice that we display our stats for under 1 million and 1 to 2 million. And while we kind of do that for efficiency's sake, the reality is that, in any market that you are in, right? If you are in, I'm going to use something, Central Orange County, right? I will tell you, if you are looking for a single family home in Central Orange County, so we're talking Fullerton, Brea, communities like these, the Orange, even the difference between 650 to 750 and 750 to 1 million is pretty sizable. They are both very competitive markets, but that 650 to 750 is just brutal. Whereas the 750 to 1 million is very, very brisk and competitive, but not nearly on the same level as that 650 to 750. So it's really important that when you look at these statistics, you understand that simply saying the market is insanely hot right now, that doesn't really tell you that much, right? Like that's not really that descriptive about what's going on. And you have to look a little bit deeper. And, shameless plug here. This is the reason why you want to work with an agent who's qualified, professional, and hopefully you guys think that's us if you're looking to buy or sell real estate in Southern California. But even if you don't, it's worth it to have someone who understands these market forces and understands market segments, because things can be different in different segments. And also, as I mentioned, price ranges vary, right? Like what might be an entry level segment in, say, Brea and Fullerton is not the entry level single family home segment in, say, Laguna Niguel or Laguna Beach, right? Those are different markets. You have to understand those differences. So, okay, jump back into stats. Done with my little spiel there. Net result is when we're looking at this absorption rate, the market is still very much nuts. That hasn't changed. And in fact, if you look at our under 1 million, it's actually gotten a little bit worse week over week. Now, what happens when you have really high demand and you have no building of inventory and every house keeps flying off the shelves? Where are prices going to go? Well, it's not really a mystery. And if we look here, it's pretty obvious, right? If we look at our 75th percentile closed prices, boy, look at what has happened to this number since the low point. We have moved almost $250,000. Now, part of this is, we don't have nearly as much data at the 75th percentile point, and these prices get kind of farther and wider apart. So there might be a little bit of reason why those numbers have a little bit more wild fluctuation to them. But if you look, right, if you look at our 75th percentile, our median, and our 25th percentile on closed prices, these are all trending in the same direction. That should tell you a lot about the market we're in. And what's really interesting to me is if you take a look here and you look at this 75th percentile market, you see that the motions are a little bit more exaggerated, right? And they're a little bit more exaggerated than our median, which is a little bit more exaggerated than our 25th percentile. But if you look here at the slope of this curve, what do you notice is that it is almost the same for our 25th percentiles, as our median, or our 50th percentile. Why is this important? Why am I harping on this? Well, the reason being is this. This tells me that this market is experiencing larger percentile gains, because remember, it's at a lower point, but the slope is the same. So as a percentage point, that 25th percentile or entry level market, that is actually moving faster than our median market right now, which is in the 750 plus. And of course, I just got done saying that the market is definitely more competitive at that sort of entry level price point. Now, this is a stat that we started doing, and it's one of my favorite stats because to me, this is the pulse of the market, because this not only tells you about people eating up old inventory, it tells you what are people doing with those houses that just hit the market. Well, if you look here, our blue line is our under 1 million, right? This says of the homes that were put on the market in the last 14 days, how many of those are still available, right? So this includes homes that went on the market yesterday. And we've seen this number deteriorate over time. And in both of our price categories, it's taken a dive, but a real big dive here. We actually reached a new low point. Under 60% of those new under $1 million listings are still available that came on the market in the last 14 days. This tells me that our market, in both of our markets, but especially this under 1 million, these markets are accelerating. So not only are these markets crazy, but they are getting crazier. They're not holding steady. They are getting more competitive. So, my advice to you if you're a buyer is, hey, if you're a buyer and there's a home that you love, go all in, because even if you wait for another one to come up in a month, it will probably be more difficult to obtain and more expensive. If you are a seller, right, what does this chart tell you if you are a seller? Well, if you're a seller, what it tells you is, there's an old adage in the real estate business, your first offer is usually your best offer. I don't actually think that's true right now, especially in the entry level price points. If you are on the market and you don't get an offer in the first 5 days, which sounds like your house is horrible, you get an offer and you don't like it, you can negotiate on that offer pretty hard. Time is on your side at the moment. Obviously, look to your individual markets, talk to your real estate professional. If you have questions about that, you can reach out to us if you're in the Southern California market area. Now, this one is our list to close ratio. And right, this is sort of another measurement of market momentum. But remember, this is talking about homes that closed or homes that were negotiated 4 to 6 weeks ago. And look at what happened in our under $1 million category. The close to listing ratio is hitting a new high at nearly 102%. This means that, guess what? Everybody is overbidding houses right now. There will be very few homes that sell at their list price or below. Most homes will be going over list price at this moment in time. Of course, this might be telling you something that you already know. Excuse me. This might be telling you something that you already know. Now, if we look at our days on market, we see something else happening, right? If we look in our under $1 million category, boy, just when we thought this number couldn't go any lower, it proceeds to go lower. Now, I do think it's kind of interesting in our $1 to $2 million category. I actually saw a little bit of a rise of a few days, and I'm really curious to see if that's going to be a single week blip. Of course, if you were to draw a line through this, right, our line would look kind of like this, and we'd end up pretty close. Was last week just an artificial bottom, and we are continuing on our trajectory? I don't know, and I'm really curious to see next week's results. If you look here, this is a much steadier looking chart, and here we go, just heading down. This is totally mirrors what we're seeing anecdotally in the market. It is indeed crazy. And now let's take a look at our affordability index. Now remember, this is an index based on mid-2018 prices. So, and interest rates. So if we do that, that's our baseline. We saw, wow, homes got more affordable, bumped a little bit more affordable. And then if we look here, starting in 2021, we have been in an upward rise. Now, if you follow the news, you've noticed something happen. We have had a little bit of a blip in interest rates. I think that's driving part of this. But the other part is just increasing prices. We have upwardly mobile prices driven by a lack of inventory and low interest rates where buyers really want to buy houses. Anyhow, that's it for this week. Obviously, you want to check out our other weekly video, and that is based on the entry-level home buyer market, where we kind of dive into that entry-level market segment and really gear that towards our entry-level and first-time home buyers. So you'll definitely want to check that out. It comes out on Fridays. As always, like, subscribe, hit the notification bell if you're watching this on YouTube. And also, we love your questions and comments. Definitely keep them coming, and we will see you again really soon.